I want to start off by framing up what I've just observed in my own local real estate market. Okay. And I think that everybody's scenario on the numbers might be slightly different, at least here in the United States. But let me just talk through like what I've seen, and then I want to get your initial thoughts on this. If we go back to before COVID, so I'm just taking the start of 2020, and we look at what I would say is a pretty mediocre middle income type house in the area that I live, you're paying $500,000 back at this time in 2020. You're paying $500,000 to own this type of house. The interest rate around this time was, let's just say, 3%. And so if a person would make payments at 3% on that house for 30 years, the overall price that they paid for the home after those 30 years was $758,000. Now, today in this area, that same home is going for about $1 million. So it has, in those 4 years, since the start of 2020, and now we're, at the start of 2024, that $500,000 house is now $1 million. You're dealing with 7% interest rates. And instead of paying $1 million over the 30 years, you're now paying $2.4 million for that house. And so when we compare these two prices in just 4 years' time of $758,000 for effectively paying all the payments on that house 4 years ago to paying $2.4 million for the exact same house today, 4 years later, that is 3.15 times more expensive, 3 times more expensive than what it was 4 years ago, which is insane, which is totally, absolutely mind-blowing insane for that type of move in 4 years. You're here to, as an expert in real estate, and this is the number I can't wait to tell you more the audience, because I know you know this number.
Yeah.
But if you would have bought Bitcoin for the value of that $500,000 house back in 2020, that house cost you 70 Bitcoin. Today, if you bought that same house, which is now listed at $1 million, that house costs 22 Bitcoin for a reduction in price of 68% in 4 years. These numbers are crazy. And I think for people that are, so if you're living in a world of fiat and you're using leverage, the house got 3 times more expensive. If you're living in a Bitcoin world and paying Bitcoin for a house, it got 68% cheaper. This is a dichotomy that I don't think the planet can even comprehend. So what in the world do you say to somebody with this? Like, where do we even start this conversation with those hard-hitting, ridiculous mathematics in your face? How do you start this conversation with somebody? How do you even begin to broach the subject, Leon?
Not easy, to be honest with you. I take 2 approaches. So the first approach is for an individual that just wants to save.
Yeah.
And the second approach is for a real estate developer. So a company whose business is it to provide housing, to build real estate. I think the numbers that you just mentioned pretty much sum up the opportunity cost of saving in real estate rather than saving in Bitcoin, right? Because,
or the other way around, the opportunity cost of saving in Bitcoin relative to,
or the other way around, exactly.
Yeah.
If you look at Bitcoin just as a store of value, it's a superior store of value to real estate, and it deflates at a rate that housing, even if you buy it on leverage and you finance the purchase of a house, you cannot keep up with the deflation of Bitcoin, right? So Bitcoin has completely changed the dynamic because people now need to look for a different store of value. Real estate has been the number one store of value for the past 50 years. Since 1971, when the US went off the gold standard, real estate has pretty much become the preferred store of value globally. There was a study by McKinsey that came out in 21, and it estimated that 67% of the world's wealth, around $300 trillion, are saved in real estate. But now that we have Bitcoin, the opportunity cost of putting your money in real estate is just too high, right? So saving in Bitcoin just makes more sense. Now, the question is, what problem does this bring for real estate investors? And if you look at the balance sheet of a real estate company, on the liability side, you have mostly, not only, but you have debt, because real estate is a very debt-intense business. And as real interest rates go up, the liability side of the balance sheet is growing. It's growing massively. And now it has another negative consequence, what you just mentioned. As interest rates go up, financing becomes less affordable because the cost of financing over time increases. So less people can afford housing, which leads to less demand. And what we are seeing right now already, demand for real estate is going down, which means that prices of real estate go down. So if you're a real estate developer, you're faced with the issue of having increase in debt burden, but at the same time, there's less people willing to buy housing. And I believe it's very important for a real estate investor to bring Bitcoin on their balance sheet, right? Especially millennials and Gen Z, they have been priced out of real estate already because real estate has become so expensive. And now they can't afford it either because of financing. So in order to be honest with you, as a real estate developer, in order to survive, I think you need to bring in Bitcoin on your balance sheet. And I quickly also explain why. Bitcoin has, as we know, excellent monetary properties, and it will increase in price with increasing demand. And the only way to weather the inflationary pressure of the fiat system as a real estate developer is by owning Bitcoin and participating in the value increase of Bitcoin, because real estate is a very credit-intense business.
Mm-hmm.
If you're not able to increase your credit worthiness, you're not able to compete. And I believe going forward, banks will understand that those companies that hold Bitcoin on their balance sheet, they will be more credit worthy. And that allows you as a real estate developer to leverage the value of your real estate in Bitcoin, potentially refinance your real estate, buy Bitcoin with additional capital, and build a healthy balance sheet that allows you to stay competitive. Because my prediction, it's just a prediction, I don't know, but I believe that a large number of real estate developers will go bust within the next coming 18 months. We can already see it in Europe especially, but we can also see it in the US.
So much of it is an interest. You say it's capital intensive. You're using lots of leverage to do this. It comes down to your credit worthiness. And as you're trying to play this, when a person hears those numbers that I spouted off at the beginning of the show, they're saying, well, if interest rates go back down to the 3% level, based on the price doubling, I would want to buy more real estate again. So I guess this question is very speculative, but it gets to the essence of what a naysayer who's hearing that start of the show would be saying is, well, once interest rates come back down, I'm going to buy again, and then the prices will double, and I'll make out like a bandit because I was highly levered. What is that person missing when they're thinking about like what the trajectory of the next 5 to 10 years looks like, knowing what you know about real estate and Bitcoin combined?
Yeah, I try to make an educated guess. So number one, for the foreseeable future, I don't believe that interest rates or mortgage rates come down back to 3%. Inflation is just too high. You need interest rate at a 4 or 5% level in order to deal with inflation. That's number one. And number two, we are witnessing a paradigm shift. So why is real estate so expensive? It's not so expensive because of its utility value. It is so expensive because it has been priced away from its utility value. There's a financialization process that happened with the asset of real estate, because as money loses purchasing power, people are forced to invest into scarce assets. And real estate has been the scarcest asset that has been accessible. But now we have Bitcoin. Bitcoin is a much better store of value. So I'm assuming that most of the monetary premium that sits in real estate, and it's up to 70% in the US and in Europe, up to 70% of the value of real estate is the monetary premium it carries as a store of value. I believe as Bitcoin comes into the equation, that monetary premium will eventually, over time, flow into Bitcoin. Real estate will collapse to its utility value, and the deflation of Bitcoin will be a multiple times higher than the money that can be made with real estate. Even if interest rates go down to 3%, and I like to give an example, the following example that I usually give, because we are a real estate development company, and over the past 3 years, I had to deal or write reports for our employees, and also for the people that I work with, helping them to understand why we need to integrate Bitcoin into our business. And the example I like to give is in 1995, if you are running a shop on a high street, you were forced to learn about the internet because e-commerce came in, and e-commerce as a business model disrupted your business model. And I believe that Bitcoin is disrupting the real estate business model, similar to how e-commerce disrupted the retail business model. And similar to how email is now the preferred way of sending information, I believe Bitcoin will become the preferred way of storing value. At this point of time, the preferred way of storing value is real estate. And because Bitcoin is superior as a store of value, it's scarcer, it is highly liquid, you can move it in times of crisis, it is difficult to tax and to destroy, and cheaper to maintain. Bitcoin is in direct competition to real estate in its function as a store of value.
Yeah, I totally agree with you. Give us a rundown from the different types of real estate, whether it's commercial, residential, kind of go through that, just break it down for us, and how maybe a person should be thinking about how Bitcoin should be incorporated, not incorporated for these types of, these different parts of the industry.
Yes, I'd love to. I focus on residential properties, so commercial is not my expertise, even though I also deal with commercial real estate. But by a rule of thumb, I believe the rules apply to both, to residential and to commercial. So number one is the active decision to not invest parts of the profit in real estate, but rather invest it in Bitcoin. Number two, the maintenance reserves that we just discussed. And number three, which I believe is a very important strategy going forward, refinancing and leveraging your real estate into Bitcoin. Obviously, the game plan that Saylor has laid out, where he's using a company that generates cash flow in order to incur debt to buy a the disinflationary currency, which is Bitcoin, pay back the debt in an inflationary currency, which is the dollar, real estate investors can do the same thing. So I believe that real estate is the perfect collateral to incur debt, to buy Bitcoin, because you can pay back the debt with the rental income, and you are not dependent on the asset Bitcoin, which is very volatile, to pay back the debt. So we personally, at this point in time, we are developing strategies to take on debt on our real estate, and also to refinance the real estate, because the real estate that we have bought, both residential and commercial, 5 to 10 years ago, has risen significantly in price. So now, usually what do real estate investors do? They refinance their properties, they take the additional cash, they buy more real estate. What I'm suggesting, and I know there are products being offered to the market very soon, if you own real estate, you want to refinance your real estate, take the additional cash, buy Bitcoin with it. Don't reinvest it in real estate. Maybe wait 5 years, up to a decade, to see how the real estate market is going to develop. If a decade is too long for you, wait till after the halving. In 2025, then you can reconsider investing in real estate. But my thesis is, and I think, Preston, you would agree with me, over the next 18 months, Bitcoin is going to outperform real estate. Bitcoin is most likely going to outperform any type of asset in the legacy financial system, right? So in order to take advantage of that, refinancing, take the additional cash, buy Bitcoin. However, it's important to pay attention to the interest rates. Interest rates have gone up. So if you refinance your property, you need to make sure that you can carry those higher interest rates, right? So this is a strategy that has to be assessed on a case-by-case basis. But I believe generally applying the strategy that Saylor has applied to MicroStrategy onto a real estate portfolio is very smart.
I think when you look at what you just said, like I totally get what you're saying from a math standpoint. I agree with the hypothesis, but I think for a lot of listeners that would hear that, they would probably be very opposed to the idea. And I think that they would be opposed to the idea because they're looking at it from their house, and they're looking at the risk of, I could lose it all because I'm refining into a higher interest rate than where I was already at to buy this, what is a very speculative, and I'm using the word speculative because it's high volatility, this highly volatile thing. And that's not something that I ever want to put my family and loved ones in that position. Where I think you're looking at it from a different lens than probably the listener that just heard that is you're doing this from a business standpoint. You're not doing this from, this is my home and this is where my family lives. But I think a lot of listeners are hearing it from there. And I know Michael talked a little bit about this idea during the last bull run, and there were tons of people coming out, especially in the bear market, saying that was very irresponsible and something that should have never been said because the listener might not be in the same frame of mind or context as to like what Michael was doing with his. And by the way, he's not borrowing money to buy Bitcoin. He's just issuing more shares because in his mind, the multiples don't make any sense. And what's so fascinating, I know this is way off topic, but I find it really interesting, is he's debasing the amount of common stock that he's got. He's taking that cash, he's buying Bitcoin with it. And when you look at the performance in a per share basis, each one of these shareholders have more Bitcoin to their shares than what they had before he did it. He's able to do this because his company's at, I don't know, a PE of 30 or 35 or whatever. And Bitcoin's undervalued. His company, in his opinion, is overvalued relative to where he sees equity markets going in the coming 5 to 10 years. He's been very right about going about it this way. And you know what? What's interesting is, in a way, you're saying the same thing, but you're saying it from an equity, a real estate equity play, as opposed to an operational intelligence company's common stock that's publicly traded kind of way. And I think that you're obviously talking about more leverage and a little bit more interest rate sensitivity than what Michael's doing with his common stock on a publicly traded company. So I personally want to throw that out there because a lot of the times when you're having and what my opinion is that this is a very high level financial engineering type conversation, the people who are hearing it from their point of view and not your point of view or my point of view. And there's a lot that can be lost in that translation when you're doing it. So I don't know if you have anything else you want to add on that particular topic, but I think that's an important foot stomp for listeners that might be only looking at it from their home's value or that point of view.
No, I agree with what you said. I have nothing to add. You're right.
You got your start in Bitcoin back in 2015. And you were taking a Mises philosophy and ethics class or degree when you stumbled upon this topic. Tell us about this orange pilling event for you. What brought this on?
Yeah, it was a journey with a lot of ups and downs, and it took me some years to trust my intuition. I actually learned about Bitcoin a little bit before that because there were certain websites that were popular amongst the student body. I was studying philosophy and ethics and business management, so I did a joint bachelor's. And a friend of mine told me about Bitcoin, basically. He mentioned it in a conversation, and he said he's using it on some websites to purchase certain goods. And that intrigued me, basically. I was always interested in the internet. I was always interested in finance. And that really intrigued me. And then in 2015, a friend of my father, who was a venture capitalist, he basically told me about Ethereum. He said there's going to be an ICO of this guy called Vitalik, and he's going to launch something similar to Bitcoin, because he knew I was interested in Bitcoin. But at that point of time, I was interested in Bitcoin as a censorship-resistant payment network. I was not looking at it as money, store of value, anything like that. I had actually very little knowledge of what money is and how important the function of storing value for money is. So I was looking at Bitcoin as a censorship-resistant payment network, and I got into Austrian economics and Rothbard and Mises, and I thought, finally we have something here that the state can't interfere with. And then when he told me about Ethereum, I said, what is the difference? Because Ethereum at that point, they changed the narrative usually, but at that point they marketed themselves as a world computer. I was like, what does that even mean? So then I decided to write my master thesis on Bitcoin, to really dive deep into Bitcoin and to understand Bitcoin. And I looked at Bitcoin from the perspective of Austrian economics and methodological individualism, and the potential that Bitcoin holds for the remittance market and for individual freedom. Those are basically the two tenets that I looked at. And in 2016, I got into real estate development. And then as my journey in real estate sort of continued, I started to question, why has real estate become so affordable? And then I said, why? Because it's a store of value. And then I thought Bitcoin is also a store of value, but it's actually much better store of value than real estate. Mm-hmm. And then I looked at the market cap of real estate and I said, if real estate has become so valuable because it is used as a store of value, and Bitcoin is a much better store of value, Bitcoin could potentially grab a significant portion of real estate market cap. And that's when it really hit me. I was like, oh, wow, this is not just a form of payment. This is near perfect money that potentially is going to drain real estate of the monetary premium it has accumulated. And then in 2020, Saylor came along and he talked about Bitcoin as digital property and all the leverage plays that he laid out. And those leverage plays, as you mentioned, that's part of the real estate business. The real estate business is basically a leverage play where you insure debt in fiat, in inflationary currency, and you buy an income-producing asset that is scarce, that protects the value against inflation, and use the cash flow to pay back the debt. So what Saylor said resonated with me very much. And it helped me to understand the potential of Bitcoin. And that's when we decided we need to develop Bitcoin strategies for the business.
The one thing that I really toy with, because I think that you're right, interest rates are going to be higher. Like, we're not going back to 2-3% interest rates for home loans like anytime soon. I think that they could maybe come down in the next 6 months from a very speculative opinion, right? But I think 4 years, like all those numbers that I threw out over the last 4 years, if we jump 4 years into the future, I think you have a very similar dynamic play out once again, where prices could go even higher just because of the sheer amount of monetary units that are being added into this global game. But like you've highlighted so well, this doesn't mean that in Bitcoin terms, the buying power of these real estate properties are going up. In fiat terms, sure, yeah, they're going higher. But in Bitcoin terms, I mean, if the last 4 years is any demonstration of that, even though the house doubled in fiat terms, the Bitcoin price was down 68%.
If you think about what Bitcoin is, Bitcoin really, it's an ETF on the global ingenuity. The smartest and brightest people in the world, they are starting to adopt Bitcoin. And if Bitcoin is going to become what we expect it to be, it will somehow or some way serve as an index on global productivity. If it's the main store of value that people use, and if it's the network to settle transactions, then at some point in time, Bitcoin is going to be an index on global productivity, right? And I like to use the analogy of calling Bitcoin an ETF on the global ingenuity, because by owning Bitcoin, you participate in the productivity of everybody who's using Bitcoin, and it's innovative people in the world, it's tech companies. So there's not necessarily, from my perspective, there's not necessarily a need to hedge with any other instrument, because Bitcoin is such a great instrument, and it allows you to participate in the productivity of everybody who's using it, which are more people, more companies, and potentially in the future, most of the companies and most of the individuals.
So most people are familiar with PE ratios when you're talking about publicly traded stocks. So much of the S&P 500 and all these companies that are just highly capped are probably around a PE of 30 or 35. And for people to understand what that means in return, take 1 divided by 30 or 35, and that tells you the percent that they would be expected to make based off of the purchase price. So let's just take a PE of 25, because that's really easy math. If you have a PE of 25 for a publicly traded company, you're expecting maybe a 4% return by buying that company at the current market price. I'm curious, and I know you guys talk cap rates in real estate, but what PE ratio would you say a lot of the real estate that you're looking at today is currently priced at? And the intent that I have for highlighting this is just to kind of, first of all, offset the difference between maybe private real estate markets that aren't in the public domain, what type of returns you're getting there. And where I would really like to hear your comments is you had made the comment about Bitcoin potentially stripping monetary premium out of the real estate market. What do you think that these PE ratios could potentially go to in 10 years, 15 years from now with Bitcoin kind of doing what it's doing?
That's a good question. I know that one property that we've sold in November of 2021, at the time, it had a PE ratio of 32.
Wow.
And
I'm saying wow because that's a really high capitalization rate for something that's not in public markets that's like super high quality equity.
Yeah,
That's
no,
high,
absolutely. I agree with you. And the buyer was a pension fund. And the pension fund, they literally called us, said, hey guys, listen, we know you don't want to sell the property, but we need to spend money. We've got X amount of cash we need to invest until the end of the year. We've got pressure because of, at that point of time, you still had low interest rates. And they just wanted to place their money somewhere. And they had around they calculated with like 2.3% return on a year-by-year basis.
Yeah.
That the same property, we talked with the agent who helped us sell the property, right now fell down to a ratio of like 22, 23.
Wow.
So
it's already you're already seeing that that monetary premium sucked away. But where does that end? Like what level I have opinions on where I think this goes. I'm curious what your opinions.
I'm also interested in your opinion, to be honest. But I can make an educated guess.
Let's hear it.
If you now bring in also Bitcoin as a unit of account, it makes things even worse, right?
Yeah. I
believe that eventually, if right, I mean, this can take decades to play, and it's just an educated guess. And it can be problematic trying to predict the future. So I'm just going to take a guess here. But this can go down to 10 or maybe 5.
Yes, I have the same exact opinion. I think within 15 years we could see high quality equity priced at a PE of 5 in Bitcoin terms, right? If we're really moving towards a Bitcoin standard and unit of account around the world, I think a lot of this could actually even get to like a PE of 5, with maybe that being an overreaction, and maybe normalizing between a 7 and a 10 with pricing and capitalization. It's not going to be 30. It's not going to be 35. There's just no way. And I think Michael's, when you look at Michael Saylor and what he's doing with the MicroStrategy, because he started off very, doing debt. It was really low interest rate, convertible debt that he was doing. But now he's just literally just selling shares and converting this. And what he's really saying and screaming to the world, in my opinion, he never said this to me. This is just Preston Pysh's opinion. I think what he is screaming to the world through his actions is a PE of 30 and a PE of 35 is laughably overpriced in a Bitcoin world. That's what he's indirectly saying to everybody. And it seems like you agree. Boy, it's going to be exciting if we're right, right? If we're right, oh my God, this is going to get wild. This is going to get wild. Very exciting. Very exciting for people who do want to own equity. I want to own equity. I just want to own it at a price that I think is reasonable and with a unit of account that's not going to be debased like crazy.
Yeah.
So, any other thoughts?
Well, I fundamentally, the last comment you just made, I think that Bitcoin it's the first finite resource next to time that we have discovered in our universe, at least. So once this unit of account comes in, it changes the dynamic of every single asset in every market, right? And I think that the real estate investors, because of the low interest environment, they had no necessity to look at Bitcoin because owning real estate was almost like printing money. They are now faced with higher interest rates, lower profit margins, inflationary pressure. And now these people are coming into Bitcoin. And I think it's going to be interesting because next to debt, it's the largest asset class in the world. So once these people understand Bitcoin, there's going to be a lot of capital inflow into Bitcoin. And we can already see the data. Relay, Swiss-based Bitcoin exchange, they recently shared that 75% of their OTC trading volume is by real estate investors from Switzerland and Germany that divert or diversify their profits into Bitcoin. And I'm just excited for what's to come, to be honest.
I'm so excited too.
If I would be a bank and I would finance a real estate developer, what I would do is the following. Let's say somebody needs $10 million in order to finance a project. I would give 11, 12, $13 million. And with that additional 1, 2, 3 million, I would require the real estate developer to buy Bitcoin and hold it. So once you start developing the real estate, you already hold Bitcoin on the balance sheet as a hedge against two things: hedge against inflation, hedge against the monetary premium being drained into Bitcoin, and also you build your credit worthiness in case you need to refinance in the future. So I envision a future where real estate development and real estate financing will also include Bitcoin.
That is such a profound thought. I never even thought of it from the monetary premium reduction, in addition to the inflation hedge on the. I know one thing: if you're issuing loans and you're a bank, I hope you're paying attention, because I think to the common person, we sound absolutely nuts to them right now. But I think for people who understand Bitcoin and like where it's going in the coming 4 years, good Lord, this is about to get crazy. This is about to get crazy.
No,
Leon,
absolutely.
I love this conversation. I think it's because it's a conversation that I've had privately, but have never